Good morning, ladies and gentlemen. Hello, guys. I hope everyone is doing very well today. I would like to welcome the new traders on board to this live trading sessions we host Monday to Friday. So, how is trading going, guys? Any exciting trading activity from yesterday? So before we start, just to make sure we all know about the weekly podcast we do here at Admirals every Monday. I record and upload the podcast. You can download them on your devices from the platforms you use anyway. So if you haven't have the chance yet to hear the yesterday's ones, please feel free. I'm sharing the link with you guys. This is the website link. You can also find it on your on the different podcast platforms you are using. And for those who are new and they don't know, here at Admirals, we have our mobile application. You can download it from the App Store, from the Google Play. And for me, I use it a lot when I do my investing activities here, when I buy the stocks, because really, guys, it's really simple to invest just small portion of your small portion amount. It doesn't harm anything if you set it aside and you just learn a little bit about investing. Now I'm preparing a course for you. We're going to upload it in the next month or so in the website. So you're going to have the opportunity to learn basic investing tips and strategies. And really, you can do very, very simple stuff using the mobile application. Also, our risk warning, please take a few seconds to read it if you haven't read it yet. Hello, guys. Mr. Carlos, good morning. Winnie, Laura, Mustafa, Rumen, Cherry, HV, hello, Peter. Welcome, guys. So let's go to our website. Let's start with the economic calendar. And not many news events for today. If you listen the podcast, if you already listen to the podcast, you will have you will know that on tomorrow, after tomorrow, and on Friday, we're going to have major banks announcing their interest rates. And that's why, guys, I would like you to every week to download the podcast and listen to it at least once, because you're going to be aware what's going to happen in the market for the week. And some key events, the podcast is only 3 to 5 minutes max, not more. So major events like interest rates, like GDP, like CPI, these are like unemployment rate, like non-farm payrolls, everything. I just break it down for you in a very simple format so you can really enjoy a 3 to 5 minute listening, and you will know what's going to happen in the market. So you know how to protect your capital when it comes to intraday trading, if you are doing, or if you are a new trader, just to get into the mode and the trading mode. That's all. So not not, let's say, just some speech today, so it's nothing to worry about. Then we have, if you go to analytics and you press here at premium analytics, you have access to this portal here. It's a brand new and upgraded portal with trading suggestions, trading ideas for those who want to play around. I already made a tutorial about how to navigate in this section here. Oh, sorry, I forget to press the recording button, so apologies for that. And I just pressed it now. So just, guys, to make sure, let me go back to the risk warning, because the disclaimer, apologies for that. So this is our disclaimer, just to make sure that these webinars are for educational and information purposes only. They don't intend to provide any trading, investment, or personal advice to anyone, okay? So back to our premium analytics. We have here at the morning briefing portal today's top headlines. Shares in Chinese companies crash after Xi Jinping's tax party with allies. Russia moves to defend Kherson against Ukraine's advance before winter. Upstart European lithium is valued at almost 1 billion in deal for US listing. Intel CEO calls new US restrictions on chip export to China inevitable. Credit Suisse near sales of securitizing product group. Meta investor urges CEO Mark Zuckerberg to slash staff and cut costs. Remember, we are in the earnings season now, and we have many events that affects the stock prices. Back to our charts. And as technical traders, that's the most important tool we have. Hello, guys. Job. Hi, I remember that you are a new trader. Thanks for joining us. I hope you really enjoy the webinars and find some value out of those. So daily chart, we are on the dollar index. So here is the thing. Here it's a key reversal. Yesterday, we had this bearish engulfing, but we said that this market, it's in general an uptrending market. So a bearish engulfing in an uptrending market, it doesn't calls for much of activity. I mentioned yesterday, if anyone will initiate positions selling the US dollar, it means going long on pound USD, euro USD, and so on and so forth, as we broke it down yesterday. It has to be in a very mindful and careful risk parameter. And also the target must be really short, not aggressive. We don't go to 2-1, 3-1 and keep the trades open. Okay, so yesterday the sellers, they didn't make any move at all, pretty much. They didn't create any new market structure, so they didn't create a lower low. We had this inside candle here. So today we expect to see, because we already took the low, we expect to see a bullish engulfing based on this chart candlestick pattern. So more strength coming into the US dollar. That's what we expect to see. Now, if this is going to happen, it is another story. Okay. And just to make sure we are not, we don't know what it's going to happen next in the market. We predict based on the past information we have in front of us. So, and room on your right, as we said yesterday, we had this range here. Definitely, if someone is going to do intraday trading, you have to understand that this US dollar index, it's the leading indicator when you are trading pound USD, euro USD, Australian dollar US dollar, New Zealand dollar US dollar, USD CAD, USD Swiss, and USD yen. This index here, it can give you the direction, okay, in most cases. So if you have, let's say, a pair like, which one? Like the euro US dollar, for example, euro US dollar. In general, from the charts, I can see that euro is stronger than the pound, than the Australian dollar, and so on. It's one of the strongest currency lately. But also US dollar, it's one of the strongest currencies. So if I want to trade the euro against the US dollar, and I see that euro is stronger than the US dollar, okay, and I have a trading signal on the euro US dollar to buy, it means I buy euro and I sell of the US dollar. It means I bet that the US dollar is going to be weaker and the euro is going to be stronger. But if I observe this leading indicator, the dollar index, I can clearly see that the US dollar here today has a reversal candle around this trend line support. This can cause the dollar to push to the upside. So maybe this is not going to be the best trade for today. For this analysis we do here based on the strong and weak currencies. Winnie, can you please check on USDCHF? Definitely, we will do it. HV, good morning to you too. Okay, it's good, guys. I like when I see talking between you, and it's good because here we are a group that we are growing. We are a trading family that we are growing bigger and bigger and stronger, and it's good to see you exchanging also trading ideas. I don't like when I see people, they are just passive behind the screen. You have to type, and most of the times your fear not to be judged by a question you're going to ask, that question is going to totally unblock your trading and your mindset in many occasions. So I really encourage you, do not feel that there are not such thing as bad questions or stupid questions or amateur questions. We learn from each other here, and that's the beauty of these webinars. Yesterday, we talked about the DAX, and we said that this market can definitely push to the upside, retested here. This one was a textbook example. We had this market doing higher high, higher low, a pullback. Some people, maybe they enter sell limits here. I was waiting for this bullish engulfing here. That's a nice trade. I hope that it's going to come and reach the target all the way up to this area here. So this looks bullish for today. The FTSE tried to push to the upside. Some rejections came yesterday, although we have to go through this obstacle, so no much room to move on the daily chart. Dow Jones, that was one of the best asset instrument we analyzed lately, and we said that we had this double bottom here. The market make this higher high, and it made this higher high, and it broke outside of this trend line resistance. This trend line resistance, you can see 1, 2, 3, 4, 5 touches. It's been retested for 5 times, and then it broke to the upside. This is a trading pattern. And what did we see? We see some minor pullbacks here. You see this candle was rejecting, didn't even close below this one. Then this one was kind of an inside candle of this section here. And then we had this massive bullish engulfing. For breakout traders, the engulfing can be traded like when we see the market takes the low of the previous candle, then a buy stop order can be placed here for the breakout. A stop loss can be set up below the low of the bullish engulfing. And then we can target this area here. Let's mark it also on our chart, because this is the next level of resistance. And why is the next level of resistance? Simply because this here was the beginning of a new trend to the downside. Question coming from Srinivias, where is the stop loss on breakout, please? When we enter long, when we do breakout based on this bullish engulfing here on this candle formation, the stop is usually being placed below of the low of the bullish engulfing candle. So if you entered here, if that was the entry with a buy stop order, when you saw that the market was taking the low of this previous candle here, so we can put a buy stop order here our stop loss can go below the low of the bullish engulfing because it's considered as from where the massive momentum came in the market. So it looks like it's a beginning of a new trend, and the target looks like can be somewhere here. Okay, that's how technical analysis. That's how this technical analysis occurs. You are very welcome. Can you do some analysis on gold? Definitely, zone to zone. Enter SL or Euro USD rebounds from the trend line and bearish engulfing. We are going to see what's going to happen. Absolutely, zone to zone. Sorry, I pronounce you as zone to zone. That's the only thing I can see on your name. Okay. So let's move on. Nasdaq and the S&P 500, they are around this area of resistance. So we don't have anything to do with this unless they broke to the upside. But we see that bearish, bullish move to the upside occurred the last few days for all the indices. This one, the Dow Jones, was the clearest. It's been almost 1 week. I'm talking about since the break outside here. I talked about this area, and I said that we're going to wait for some pullback. And the good thing is that the pullback occurred very nicely because the sellers, they didn't show any strength here. Very small bodies compared to the long bodies of the green candle. So we can see that the volume within this candle were minimal. So bullish engulfing occur, and let's hope that the market is going to take us all the way here for our profit target. Let's move on to the to the default. USD and the pound. I don't understand why I'm losing every day these trend lines from here. That's okay. Let's put it back again. So we had this trend line on the, let's start from the weekly. We have this low point here. We have this very strong area, very strong price area of resistance because of this 2020 low on the pound. And we had multiple retests here. I believe you can see them clearly. Let me zoom in a little bit. So you see on the weekly chart, we have one rejection, second rejection, broke and retested here, third, fourth, fifth rejection here. So it's a very strong area of resistance. Back to the daily chart. We said in the past, we initiate positions from here. That was a bread and butter trade, textbook trade based on our checklist. So we have the trend line, we have the horizontal support, we have the strong price action. We are in a downtrend, lower highs, lower lows, retest, boom to the short side. Now the market is fluctuating. What I really don't like here is that the market, at this point here, the buyers, they came here aggressively, but when the sellers, they came here, the market didn't sell off. And I didn't like that one. I just saw the market putting a bullish pin bar here, right on the resistance trend line, and acted as support. So this just got me a bit skeptical about that. So I'm a bit cautious with this one here because maybe buyers, they're going to put some momentum in this pair. So, but yesterday we had this bearish candle. So if we go down to the lower time frames, like the 5-minute chart, here was one trade. This one here was a good trade. The market made this lower low. Based on our analysis, we had this support, broken, change of polarity. Now it acts as resistant. So here we could enter short, and then we could take our profit right there. So, but now the market didn't make, and that's where many traders, they get a bit caught. The market now on the lower time frame didn't make lower low, didn't register a new low. So when we don't have a new low, we don't take trades to the downside. Maybe it's gonna work, and from now the market is gonna push to the downside. However, it's a very low probability trade, and better to wait, to be patient on the sidelines to see a new lower high and lower low. And then on the next pullback, we can enter short somewhere around here. Our stop can go anywhere around the last swing high, and we can target the lower point. Should we read the excessive weeks too? Look, the excessive weeks, I know that they, in other places, they don't teach you about to look too much for the weeks, but what are the weeks? As technical analyst I am, the weeks is the last point of the market had been traded. So the price accepted, the market accepted at this point, this price here. So why not to take it in consideration? Absolutely, we take it in consideration, but we evaluate the weeks differently based on the occasion. That's the hard part with the weeks. It's going to take you some time, but eventually you're going to get there. Okay, but for now, keep that. If I see a week here, it means I have a zone, minor zone, doesn't matter. My job here as a trader is to respect the technical analysis, to respect how the market moves, and to act accordingly, okay, based on how the market behaves, not based on what I would like to happen. All right, guys? I spent a little bit more time to explain this example, but that's okay. Let's move on. Euro US dollar. Euro US dollar. Yesterday we had this minor push to the upside. However, if the dollar index, we saw that it's in an uptrend, it's still around here, but it didn't make a new low, a new break of structure. So we, in a long-term picture, we take the US dollar index as an uptrend. So if we see an uptrend to the dollar index, it means the Euro USD, it's going to push to the downside. Okay. Let's move on. USD CHF. Again, here we do have the market trying to push to the upside because of the dollar index. So it doesn't look very promising for sales here. I took a trade yesterday, but with the minimal risk possible. So if the market is going to break this high today, most likely I'm going to get out of the trade because of the dollar index bearish engulfing didn't play it out. And that's right. React, don't predict. Aussie US dollar. Aussie, it's one of the weakest currencies. We can see it on the price action. For those who are watching these webinars constantly, you can kind of understand how can we see that the currency is strong or weak in general. Let's see pound USD. We had this gap to the upside and bearish close. Euro USD, we had this bullish close yesterday, but Australian dollar, US dollar, we see that the market made this long bearish candle. So it looks like Australian dollar, it's weaker than the rest. So here we can watch for some shorts, but to enter short again on our execution time frame, we have to wait patient for the market to give us this lower low. If the market does not give us the lower low, then there is very low probability for a good trade to play out. So for now, we don't do anything. We do nothing for now. New Zealand US dollar, same. New Zealand, if we're going to look for shorts based on this pattern here, we have to wait for a new lower low, a clear of the market structure. Now it's everything unclear here. USD CAD, too much mix in this pair. It just on the daily chart, it's not that clear, because we had this until here, it was very clear. We take trades, exit here, that's fine. Now the market is just trying, maybe it's trying to make a head and shoulder. Maybe this is going to be kind of head and shoulder pattern. So although I would like to see it coming a bit more to the downside, but we will see what's going to happen. So again, not much to do with that one. USD Japanese yen, it's in an uptrend. If we're going to take trades, very minimal risk and very short in and out because of this bearish engulfing spike, this bearish spike. On Friday, the Bank of Japan will vote about interest rates, if they're going to keep them on minus 0.1%. I talk about that on the podcast. When you're going to hear the podcast, you're going to listen to the podcast, you're going to understand what's going on with this one. Pound yen, nothing. Euro yen, nothing. Euro Oz is one of the clearest, let's say, because we had yesterday this bullish engulfing. For intraday trading, we have to see higher highs and higher lows. Now we see lower highs and lower lows. So if we want to go in a line with the daily direction that is up and the daily price action that is up, we have to wait for the market to give us this higher high, these higher highs and higher lows, and then we enter to the upside. Okay, for now we just see lower highs and lower lows, so we don't do anything for now. Aussie CAD still bearish, getting mixed, so intraday trading is not favorable with this pair. And let's have a look at the gold. Yesterday we had this bullish engulfing candle here around the support. Maybe the market can push to the upside, but that's very low probability trade because the major trend is down. So for intraday trading, if we find these lower highs and lower low formation, we can initiate some short positions. Let's have a look at the 5-minute chart of that one. You see, guys, even if the daily is showing down direction, the price action on the daily is bearish, so indicate that selling can come to the market. If we go to our execution time frame, and by now, I'm sure many of you that trading intraday will understand where you were getting very bad trades, because you predict the direction correct, you predict the formation correct, the price action correct, but when it comes to execution, you enter, you put, let's say, your stop here, the market maybe takes your stop and then takes the direction, and then you say, yeah, the broker is handing me, or the market took my stop, and all this stuff. Why this is happening? Because many traders, they don't understand that on the execution time frame, we have to see the momentum, and the momentum, I'm talking about high probability trades, yeah, because you can enter here, sell, and anything can happen. You can find yourself in a winning trade. That's perfect. But consistently, what's happening? Is it a scenario that if you reproduce it 100 times, it's going to give you a desirable outcome? That's the question. So to be in a momentum, we want in this pair, we want to see the market making lower low. That's it created a high probability trade. Wait for the pullback. We can either enter with a sell limit order and our stop somewhere a bit far away, let's say, or we can just take a price action and just try to trade the price action here. I don't recommend it, but if you would like to do it, it's up to you. Crude oil sideways here. We're going to wait to see what is going to happen with the US dollar, and then or Biden, if they're going to release few of their stock. We'll see what happens in the market. Bitcoin just flattening around 19K. EuroCAD, this is a nice pattern here. We call this ascending triangle pattern. in an uptrend. Now we are in an uptrend. We see the market making higher highs and higher lows. We have this ascending triangle. Ascending triangle, it's a pattern that every time the market tries to push the downside, buyers, they stepped in and they buy on a higher prices. So a breakout of this triangle, a break to the upside, usually indicates that it's going to make, let's say this is the base, it's 350 pips. It can go to 350 pips somewhere here, but we have to be careful. And if we're going to buy the breakout, to understand that here it's a strong resistance, and maybe selling orders, they are waiting here as sell limit orders to push the downside. And it's a bit hard to predict it. Okay, but that's the implication. So pretty much that's it. Any questions? Sorry, Cherry. If the dollar index will go up, is it right way to go long on the US dollar? And that's the thing. If the dollar index is going to go up based on the indices we saw before, look, Dow Jones, it's in an uptrend. Okay, so if the dollar index it's going to go up, usually, yeah, we can see the Dow Jones to push to the downside, right? But it looks like we have a little bit more until Friday. That I think Thursday there are some GDP and GDP announcements in the USA. So maybe this one can put us in a target position by that. We can see retracement, like Rumen says, definitely, absolutely, but doesn't need necessarily to show us change of character and a trend change. And also, guys, for those, the last one, and we're going to close for today, we're going to finish. So for those who traded, I just had a look today, for those who are trading the end gas, a few people, they spot this head and shoulder pattern from here. Well done. An entry was there or somewhere there, and the target played out here. So I hope by now you secure some of your profits if you are not out of the position. If you want to keep more for more declines, and let's say target the next area of support down there, but make sure the majority of your profit has been banked. Okay. All right, guys. That's all from me today. I hope you enjoy this live trading session. I will be with you again tomorrow at the same time. Guys, please make sure you like the video on YouTube if you find it valuable. Feel free, if you do have any comments or any questions, please leave your comments below on the YouTube video, or from those who are watching us through the Zoom. Guys, please make sure you give us your feedback after we're going to finish. And I would like to really wish you to have a great day wherever in the world you're located. Happy trading, and looking forward to see you again tomorrow at the same time. Thank you so much.